Hello everyone, hope you are well by the grace of Almighty God. Today is the second class or second lesson of lease, and today's topic is recognition exemption. Means when the lease get exemption or when we don't take it as a lease. When there is a two main topics. One is short-term leases. Here you can see the short-term leases, and the second one is leases for which the underlying asset is low value. So when we see the lease term is less than 12 months and the lease is low of value, okay, then we will consider it as a lease exemption, which means we cannot take it as a lease. So in the short-term leases apply to the lease with a term of 12 months or less, which is said earlier. The term of lease is less than 12 months, and the second major point is they do not contain a purchase option. Okay, the election to use the exemption for short-term leases must be made by asset class. So it should be made by asset class. Okay, otherwise we cannot elect the use of exemption of the lease. And the second topic second point of for lease exemption is when the lease amount is low value of or low of cost, then we cannot consider it as a lease. So leases for which the underlying asset is of low value applies to the lease of asset with a low value when new, such as laptop computers, mobile phones, or small items of office furniture. Okay, so these three are example of low value assets. IFRS 16 does not define a monetary amount that is considered low. What does it mean? It means, yes, what is a low amount, or how do we recognize or how do we consider it as a low amount? It may be 1 lakh, 2 lakh, or 3 lakh, but no, IFRS 16 does not define a monetary amount. The monetary amount means the monetary value of the asset. IFRS 16 does not define. An asset can only be of low value if. So when we consider as a low value, the lessee can benefit from using the underlying asset on its own. When the lessee can benefit of using the asset on its own or with other available sources, then we consider as a low value. And the main and the another example of the low amount or the low value of the asset is the underlying asset is not highly dependent or interrelated with others asset. For example, a circuit board which is cost 200 but which is required to operate an item of plant worth 40,000. So the amount of 200 is low value. Okay, an entity can elect to apply the exemption relating to asset with a low value on a lessee by lessee basis. Okay, so an entity can elect to apply the exemption relating to assets with a low value. With a low value means I can consider low value as 1 lakh, or another entity can consider as a 2 lakh. So it totally depends on lessee's point of view. We cannot define any right amount which is lower value. So this is so here it is written very clearly, any entity can elect to apply the exemption relating to asset with a low value on lessees by lessee basis. Okay, and when we consider or when we elect the asset exemption for lease, then the amount should be charged in the profit and loss account, and the amount will be apportionate as a straight line basis on the lease term. Okay, we just apply all the asset on the basis of straight line of the lease term, the cost. Okay, so if an entity, here we see, if an entity can elect to apply the optional recognition exemption to a lease, then the lease payments are charged to profit or loss account. Okay, when we apply the optional recognition exemption for a lease, then the payments, then the amount will be charged to profit or loss account on a straight line basis or other systematic way, basis over the lease term, which is totally basis of the lease term. No right of use asset or lease liability are recognized in relation to the date. Okay, no right of use asset or lease liability are recognized in relation to that date. So here is a worked example for short term leases. So if we solve the solution, then our understanding will be clear for short term leases. What is short term leases and how do we treat as in the our financial statements. Okay, here we can see UD Limited prepares its financial statements to 31st December each year. Each year, the UD Limited prepares its or their financial statements. On 1st September 2005, UD Limited entered into a lease contract for the right to use excavation equipment. Excavation equipment means digging equipment which is used in our coal mine or oil field. Okay, fine. For the right to use excavation equipment for a period of 10 months at a cost of 5,000 per month. What does it mean? In the simple terms, UD Limited entered into lease of 10 months to use excavation equipment, and each month costing taka 5,000. Okay. Under the term of the contract, UD Limited is required to pay 3 months lease payments on 1st September 2005, followed by 7 monthly payments of 5,000 per month commencing 1st October 2005. And UD Limited does not have a option to purchase the equipment at the end of the contract. As it has no option to purchase the equipment end of the contract, that's why it is a short-term lease and it will get exemption of lease and made all lease payments on time. UD Limited wishes to apply any optional recognition example available under IFRS 16. Okay, under IFRS 16. So what is the requirement given here? So requirement is calculate the lease expense to be included in OD's statement of profit or loss for the year ended 31st December 2005. Okay, so here we can see the lease term start on the 1st September 2005 with the 10 month periods, and each month I have to pay 5,000 per month. So at the end of the year, which is 31st December, I have to pay 4 months payment, which is 4 into 5,000. Okay, so here we can see, as UD Limited wishes to apply the optional recognition exemption, it can account for the lease as an expense. on a straight line basis, over the lease period. Okay, so the total amount payable under the lease is taka 50,000. Why? Because 10 months, 10 into 5,000 per month. Okay, OD Limited should recognize as expense of taka 20,000. Why? Because 4 months before 4 months in the point of 31st December to reflect the lease expense incurred in the period of 31st December 2005. Okay. Yes, OD Limited entered the lease on 1st September. Okay. So this is a short-term lease. The main point of the short-term lease is the term of the lease is less than 12 months or 1 year, and in the short-term lease there is no option to purchase the equipment. Okay, so we have to just apply all of the expenses in our profit and loss as a straight line basis. Okay, so this is the simple and good understanding of recognition exemption for short-term lease. We will move forward for the next class. Stay with us. Thank you for watching.